Hello, everybody. So this week I'm going to continue the series on how to read your tax return and what really matters. Last week we talked about the S corporation tax return. This week we're going to talk about the partnership tax return. And all intents and purposes, the forms are very, very similar. Let me go ahead and share screen here and we'll take a look at it and walk through um, the different line items. Okay, so again, we're looking at the IRS's website for as a reliable resource, and we're looking at the actual tax return for the 1065 partnership income. Um, Again, this type of return does not typically pay income taxes. Uh, Most of the time the profit taxable profit in the partnership passes on a K1 to the individual owners, and then they pay the taxes on their individual tax returns form 1040. But basically, this form is very similar to the corporate tax return. Page one, you have the name of your partnership address and a few different things. Lines G through K are just some information, initial return, final return. What's your accounting method, cash or accrual? Most of the time, we're cash unless you have a very large business. You make over 27 million a year in revenue. Number of K1s attached, that's really the number of partners, and a few other informational items. Then we have income. This is your gross receipts, your sales, your service income, whatever it is you do. A few other income items. If you run a farm or rentals, or if you sell business assets, physical assets, that gain from that will be reported there, gain or loss. Then you have total income. Again, you have a handful of line item expenses that they specifically want to see, like wages, rent, taxes, interest, depreciation, employee benefits, and a few others. But most of your expenses, just like with the corporation, are going to end up as other deductions. You have a statement that line items them out, and that's completely open to whatever you want to put in there. Um, our firm, we typically try to minimize different lines that we put into other deductions to group things together and keep the statement as small as possible. After that, this section down here is if you actually have some crazy reason why you owe taxes on your partnership at the federal level. That's what this stuff is all about down here. So typically, probably 99.9% of partnerships out there, this lines 24 through 32 are blank. Then your signature. Pretty much the rest of the form is information only for the IRS, just like the corporation return was. A bunch of specific questions. What kind of partnership is this? Do you meet certain limits, or do you have certain requirements that would justify or require additional schedules to be attached? And you have uh, 3 pages of that, or two and a half pages about of just information FYIs for the IRS, and that might have additional requirements to be reported and included on the tax return. Then, just like with the S corporation tax return, we have a Schedule K. This is basically how everything is going to report on a K1 to the partners, but this is in total where the K1s break it out per partnership ownership. And this breaks out everything based on its unique tax. For example, ordinary income is taxed differently than long term capital gains, which are reported down here. Or there's different things for interest income. You have Section 179, which is treated differently. So, and charitable contributions, credits, but basically, this is where everything is broken out based on its different tax type and how it's treated at the individual level, but in aggregate or in total, where the K1 breaks out per partner level. Then you have your balance sheet. It's very similar to the S corporation. We talk about your assets, your investments, your cash, all up here up at the top. And then we have liabilities and capital down here at the bottom. Um, and then we have schedules M1 and M2, which is a reconciliation of income and an analysis of the partner's capital. So basically, this is your equity in your company uh, as total partners. And that's pretty much it. So when you are really looking at this tax return, page one is the most important. That's what you pay taxes on. And it's line 23, which is the most important line because that's where your ordinary business income is calculated and reported to the IRS. So you want that number to be as small as possible to owe the least amount of taxes. Um, that's the most important line on the tax return. Okay, short and sweet, as it was very similar to the S corporation. If you have any questions, feel free to or comments, feel free to post them, and I'll respond to you as soon as I can. Have a wonderful weekend, and we'll see you next week.